everyone. I think we're going to get started. I want to welcome you to today's webinar titled EXIM Bank and STEP Grant Funds 101. My name is Nicole and I'm excited to spend the afternoon with you. I am actually from World Trade Center, Utah, where we accelerate growth for Utah companies through our global network, our programs, and our services. I have been with World Trade Center Utah for a little over 4 years, administering the state trade expansion program, better known as STEP. Before we get started, I want to thank our partners, Marla Trollin. She is actually the SBA's district director for the Utah district office, as well as her team, Donald McMillan. And how today is going to work. We're going to start hearing from both Jenny and Natalee from Meridian Finance, and then we will hear from Patty at the Small Business Administration, and then I will conclude speaking about the STEP grant and then answer any questions that you may have for our panelists. So let's get started. I just want to tell you a little bit about Meridian Finance, as well as Jenny and Natalee. So a little bit about Jenny. So she is actually the Eastern Regional Manager of Meridian Finance Group. She has an BS in Finance as well as an MBA. Moreover, she has 20 years of experience specializing in the field of international trade finance. She has traveled extensively and speaks both Polish and Spanish, which is very cool. We also have Natalee from Meridian Finance. She is a graduate of UCLA. She has been with Meridian Finance since 2018, where she has helped clients manage their international trade risks using export credit insurance and EXIM Bank programs. She has worked with exporters of all sizes, from large corporations to middle market companies, as well as small businesses. Finally, we will hear from Patty from the Small Business Administration. And she is a part of a team of 20 export finance managers around the country, and they are ready to help small businesses network, plan, and finance their exports. Patty also served 25 years as a member of the U.S. Army Reserve, and we thank her for her service. I will now turn it over to Meridian Finance. Thanks, everyone.
Hi, everyone. Can you hear me okay? Good, good. Thank you, and especially thanks to the World Trade Center of Utah. We're so thrilled to be here today and to also be followed by Patty, the SBA. As you can tell, Natalee and I do not work for the EXIM Bank. Sometimes we are confused for working for the EXIM Bank, but we are what's called a credit insurance broker. We happen to be one of the largest for EXIM. So today, what we wanted to do was talk to you about credit insurance and what folks should know when they're out there selling internationally. And Natalee will follow it up with providing a little bit more deep dive into some of the EXIM offerings as well. You can advance slide. So we're all on this podcast, we're all on this webinar because of the opportunity that we see. Either you've started to do some international business, you've maybe gotten an inquiry from overseas, or you've thought about it. Well, the opportunity is huge. We all know that most of the population, 95% of the population, is outside of the United States. And you know, if we think about it, the United States hasn't been around as long as our Asian or European counterparties. They've all been trading for many more years than we have, and they've actually perfected some of these programs out there. So what I would say to companies that are doing exports or looking to do exports, even if you're not going to use these programs, you need to know about them because you may be competing with other folks that are using these types of programs, because the Italians, the Germans, the Canadians, they all have these types of programs and they're selling with them. So at least understand what these programs are all about so that you can better compete. Please advance. Thanks. So needs and wants. There are a lot of needs and wants when it comes to selling overseas. Exporters need to extend credit terms to expand international sales. And why is that? Well, it could be because companies in those markets are having trouble getting access to financing. Imagine if you're trying to sell, let's say, to a company in Brazil, and they can't just go to the bank and necessarily get the financing. Or if you've requested a letter of credit from your client in Brazil, what does that mean to them? They actually have to go to the bank and put up the cash. They have to get a loan. They have to securitize that letter of credit. Makes it very difficult for them to purchase from you. So naturally, they're going to ask you for terms, open account terms. Exporters should also want to extend credit terms to foreign customers. Why? Because it is a sales tactic. Imagine that if you are in a competitive situation with, say, a company that's selling a very similar product to you, and they're from Italy, and the Italian seller goes in and says, I'm going to provide you 90-day terms. And you, as the US exporter, says, cash in advance. Who's going to win that sale? You're probably, even if the product is great, you're probably not in the best situation to be able to do that. Another reason why exporters may want to extend credit terms to their buyers, especially to distributors overseas, is they want to help their distributor be more competitive. They certainly they'd love to see their distributor have product on the shelves so that they can make quicker sales, and to support that distributor's supply chain. So there's a lot of reasons why a company or an exporter may need to provide the terms, but there's also some very strategic reasons as to why they want to provide those terms as well. We can advance, please. But there's risks, right? We all know that there's risks. And I don't have to go through all of these, but I'm going to give you some examples. Many times what we hear when companies do export sales is they may have been introduced to a company overseas, and they feel that they know this partner very well. Maybe they've been invited to somebody's family's wedding or something. They tend to have these personal relationships and want to be able to do business in the old-fashioned way of just shaking hands. But we know that even today, there's so much is coming through online. You don't necessarily know who you're selling to. You don't know if they have cash flow problems. You don't know if they're God forbid, defrauding you. You don't know who necessarily you are selling to. There could be general economic conditions in those countries. You know, here in the United States, we had PPP, we had a lot of bank forbearance. Our government helped us with bouncing back faster than some of these companies in other countries. So you may not fully understand the economic conditions in that country. You know, one of the things that I've heard in the past for non-payment is, let's say you shipped a container worth of product and your buyer overseas has the container, and they turn around and they say, well, I'm sorry, I can't pay you because I still haven't sold all of that container. That's not your problem, okay? Just because they haven't been able to sell doesn't mean that they're not supposed to pay you. That is what credit insurance is going to help you do and mitigate as a risk, is all of these, I don't want to say excuses, they could be very legitimate reasons why they're not paying, but these are not your issues for not paying. I want to talk a little bit more in depth about these last 3 points here. And I know Patty's going to talk about this quite a bit, but I'll maybe set the stage a little bit here. When companies here in the United States are doing business domestically and internationally, they're creating receivables if they're selling on open account terms. Many times when you go to your bank and your bank is looking at your company and your business and your receivables, they're okay with seeing those domestic receivables for the most part. But if you start selling internationally and creating open account sales, creating foreign receivables, many times the banks get nervous about that and they actually pull back, which sounds counterintuitive because here you are as a small business trying to expand your sales and do more business in different markets and spread the risk, yet the US banker is going to see those foreign receivables and possibly pull back. One of the things that we're going to talk about is how credit insurance can actually make you look better in front of that bank. I'm going to turn it over. We can advance.
I can jump in.
Yeah.
Thank you, Jenny. I mean, you touched upon it, but credit insurance, what is it? What does it do? I mean, Jenny hit all the risks on the nail. But what it does is it protects against all your foreign receivables against default risks. So like Jenny mentioned, those cash flow issues, bankruptcy, political risk, any of that, that's going to be covered under this policy. It also helps you guys extend more competitive payment terms with confidence, especially as we recover in this economy. It helps expand international sales and market share. It helps increase international profitability. And it also enhances your capacity when borrowing with the lenders because that foreign AR is going to be insured. So when it comes to export credit insurance, you can go ahead to the next slide, Patty. There's quite a few different carriers, and they're in 2 different markets. So the Export-Import Bank of the United States, they are a federal government agency that assists, the U.S. exporter in selling overseas and financing and helping facilitate those U.S. exports. But with that, they do require that at least 51% of your manufacturing and goods are made here in the U.S. to qualify for those policies. And they only cover your export credit sales. Now, the private insurance market, there's a number of different carriers in this market. There's about 15, I would say. And some of the names such as AIG, Great American, Chubb, Liberty Mutual. And with these carriers, they do cover both domestic and export credit sales. So they're a little bit more flexible than the government bank, but EXIM Bank supports mainly those exports for small businesses. So it's a really great policy structure, and they come with 3 different policy types, which I'll go into more detail in a little bit. So the types of policies, these differ from EXIM Bank and the private market, but we'll start with what they can cover, which is your whole turnover. So there's a whole turnover policy that includes all of your buyers. So the policies will insure the entire portfolio, all the buyers that you're selling to on open account credit terms or LC terms even, or CAD credit terms. There's top buyer policies that insure just your top largest accounts. And there's even policies that'll insure just your smallest accounts. And with these multi-buyer policies, they're actually more cost effective because you're spreading out that risk. And as a broker, it really does help to have us on your side because we'll be able to find you the best policy that's going to suit your needs. Just because there is so many different policy structures and types and the ways that it can work will really benefit your company, and we can be able to provide that for you as a broker. So with that said, there's also an excess of loss policy, which is known as a single buyer policy. The single buyer policies do cover just that concentration risk within your buyer portfolio, or it can cover just the one-off transactions that where you have a customer overseas and they want to request payment terms, let's say 90 or 180-day terms, and you're nervous about it, that's where you could reach out and request just a single to cover that one transaction. You will find with those policies that they are a little bit more expensive because they are covering just a single risk, right? So with these different policies, it really does, you have the options to do both. Where they differ is in coverage indemnity, so the coverage percentage. So under a multi-buyer policy with the EXIM Bank policies, you'd be looking at 95% coverage on all your foreign AR. And under a single buyer policy, you'd be looking at 90%. So the coverage percentage does go down based on the different spreads of risk that you are giving to them to insure. As for buyer approvals, so the process works, again, very differently in both EXIM Bank and the private market, but with the named buyer structure. So you can have a named buyer policy where you're running all of your customers through the carrier to get approved before doing business. So you're going to say, hey, EXIM, I have this new buyer. I'm really nervous to sell to them. They want 90-day terms. What you're going to do is you're going to have to supply EXIM Bank with the buyer's name, address, billing address, all this information, possibly your ledger history or your trade references or some sort of credit information to support that credit limit request. But you will get prior approval before doing business. And so that's what's required under a named buyer credit limit policy. Where the other structure comes into play, it's called a discretionary structure. So where the decisions are based on you, the exporter. So what happens is they'll rely on your internal credit practices and procedures for you to approve those buyers at your own discretion. So I would say those policies come into play under the EXIM standard policies, which are for more experienced exporters that have been doing business for years, have all their customers already selling to on credit terms. So you'll be able to qualify those customers under what's called a discretionary credit limit. And some people like to refer that to as a blanket credit limit. So you can approve those clients based on your own ledger history or credit procedures that are already in place. So as we go into premiums, the policies are roughly, very inexpensive. You'd be looking at a fraction of a % of your total annual sales. So, and it's the same in both markets, both EXIM policies and in the private sector. The EXIM Bank policies, they have 3 different types. They have the Express policy, which is a great policy for new to exporting. And the premium rate starts there. It's about 65 cents per every $100 invoice. So let's say you had a sale for $50,000, you'd be looking at paying about $325 to insure that order. So it's pretty inexpensive. And let's say you had a major loss, it's definitely worth it to have it on your side. And you'd be, again, covered at that 95% if there were a loss. So with that, in the private market, it works a little bit differently. They have an upfront minimum premium that you'd be paying to cover projected sales for a year. So at the end of the year in the private policy, you'd submit your actual sales, and then you would true up or reconcile those sales based on what you guys actually do. Whereas with EXIM, under the Express policy, it's pay as you go. So it's a great starter policy, like I said. It's low rates, and then each month, if you have a shipment, you would report that premium to EXIM. And then in the months that you're not shipping, you wouldn't have to pay anything. So it is a really great starter policy if you have some clients requesting terms, or it is your first shipment, there's no minimums you can apply. So as long as that your company has been in business for a minimum of 3 years, that's their one requirement as well. So yeah, touched upon the monthly and quarterly reporting, and then claim files. So the claim filing window varies with the EXIM Bank and in the private sector, but I would say most of them open when a customer becomes 90 days past due from the due date. And with that, they just like to make sure that you're using the claim opportunity as a last resort. They want you to keep and maintain the relationships with your customers. So with that, they give you that period of time to work and collect from your buyers. And then once they aren't paying, if they're straight up just being a jerk, not responding, you can then proceed to file a claim. Of course, with insolvencies or political risks, it's immediate. There is no time because it's very clean cut, right? You have a customer that filed bankruptcy, here's the documents, you would then receive your money immediately. With the protracted defaults, where it gets tricky, right? Because your buyer's just not responding. And in most cases, you want to work with the buyer and continue working with them. So they give you that leeway. EXIM's claim window opens at 90 days and closes at 240 days past due from the due date. And it's the longest claim window out there. So they really do support and give their exporters that time that they need to improve and grow those relationships. You can advance, Patty. So again, I know I just said a lot. There's a lot of moving pieces to these policies. So if you take away anything from this whole webinar, just know that credit insurance can help you offer more competitive terms. It can protect your accounts receivables so you can just sleep at night. It can increase your borrowing base. So that means, you can insure your foreign AR so that it can be included into your line of credit with your bank. And Patty's going to go into that a little bit further right after this. And then it can also just support your accounts receivable function. So let's say you don't have credit practices in place and you're very new, you don't know what a credit report is, how to pull one. That's where these policies can really help you guys and support you, because they will take on and underwrite all your buyers on your behalf. So it really is a great tool. Not enough companies use it here in the States. So please, if you have questions, feel free to ask us. Next slide.
Great. Thank you, Natalie. We'll leave it off here for us. Our contact information is below, and I think you were getting you're all getting a PDF of the slides. And I'll send it over to Patty right now. Thank you.
So hello, yes, I'm Patty Brewer. I'm with the Small Business Administration's Office of International Trade. And I'm going to talk to you today about some of the SBA's export finance programs, as well as a little bit about the network. So by the time I'm done talking in the next few minutes, you're going to understand a little bit more about who the SBA's Office of International Trade is and how we fit into your exporting network. I'll also talk to you about some definitions for small business and for eligible export. And then you'll get a better understanding of our export working capital program and whether or not it's a good fit for you. So first of all, the SBA's Office of International Trade, our headquarters is in Washington, D.C., and the Office of International Trade is divided into 3 divisions. The first is the State Trade Expansion Program that monitors or manages the nationwide STEP program. And Nicole Sherwood's going to give you a lot more information about STEP, and it's such a great tool for small business exporters that need to get some grant funds to offset some of their market development costs. The next division within the Office of International Trade is the International Trade Finance Group, and that's the group I'm a part of. And all the export finance managers in the country are a part of this group. And we're essentially information traffic cops. So if you have questions about the exporter's network, about financing, about borrowing, about going to a lender, you give us a call and we'll help you make some smart choices. The final group within the Office of International Trade is the International Trade Affairs Group. And these are the folks who can talk to you and answer your questions about various trade agreements that this country has signed up with. So for example, if you're involved with sales to Mexico or sales to Canada, and you're interested in understanding how the US-Mexico-Canada trade agreement works for you, then these are the folks you want to call. And I can certainly connect you if you give me a call and we can get your questions answered. Now, as I said, SBA, Office of International Trade, is just one piece of the puzzle. There's a whole network out there to support you. And some of those groups that are in that network are listed here. So the Utah Small Business the Utah SBA's district office is one really big source of information. You can also go to the World Trade Center, as you're doing now through this webinar. And of course, the World Trade Center also administers the STEP grant. And then we also have the U.S. Commercial Service in Salt Lake City. Invaluable resources to connect with. And if you connect with one of us, you'll connect with all of us. So who is a small business? A small business is any company with tangible net worth of less than $15 million or net income of less than $5 million. And what's an eligible exporter? Well, first of all, if you are an exporter and you've been in operation for a year, whether you've been exporting or you've been working on domestic business, you are eligible. Now, sometimes the 12-month rule can be waived. If you have founded your company and you've worked in international trade in the past, or you're very, very familiar with the industry, sometimes this 12-month rule can be waived. What cannot be waived is the requirement that your company be at least 51% owned by an American citizen or someone with legal permanent residency status. So what's an eligible export? It's any good or service that is outbound from the US. There is not a content rule, so US content is not a factor. And you might be an indirect exporter. So there are two types of exporters. The first is a direct exporter, and that's someone who sells their goods directly to a foreign buyer. Or you might be an indirect exporter, and that's a company that sells to a US company, and the US company ships the goods overseas. You might be an indirect exporter and eligible for SBA's export finance programs. Now, if you're an indirect exporter or a direct exporter, the goods do have to ship from the US. So if you're shipping from Mexico or you're shipping from China or Taiwan to your final buyer, to your overseas buyer, that's a drop shipment and it's not covered through the export finance programs. However, the SBA has a variety of financing programs, and if you don't fit in with one, you might fit into another, and that's the case with drop shipments. So the SBA has a finance program called Capline, and that program does support drop shipments. So give me a call, we'll talk through your details, we'll figure out which program fits your specific situation. So ineligible exports. As I said, drop shipments I cannot support. I can't help you if you're in hospitality or if you're a gas station. And I'm legally prohibited from supporting transactions that go to Cuba, Iran, North Korea, Syria, or Sudan. And then if your buyer has an OFAC sanction on them, again, I can't support you. For companies I can support, and I can support a great many other exporters, there are 3 loan programs that can help you that the SBA has developed. Now, my talk today is going to specifically focus on the Export Working Capital Program, but just be aware that there are 2 other finance programs that you are eligible for. The first is the Export Express, and that's a smaller loan program. It's got a $500,000 lending cap. It's a very, very flexible program. So if you need a line of credit or you need term financing, the Export Express is a very good program for you. The other loan program is the International Trade Loan, and that's a much larger loan program. It's a $5 million loan program. And you can use that international trade loan to purchase equipment, purchase real estate, to refinance debt, or to purchase a company. So let's talk now about the Export Working Capital Program. So the EWCP has a maximum loan limit of $5 million. And if you have strategic repeat buyers who purchase from you on terms of say 30, 60, or 90 days, then you can receive advances on those accounts receivable through the Export Working Capital Program. So essentially what happens is you set up a line of credit with your lender. When you generate either a purchase order or a foreign account receivable, you take it to your lender and you request an advance. A typical advance rate on an insured account receivable is 90% of the value of the receivable. You can use the advanced funds to pay for inventory, components, freight costs, or bank fees, any working capital need that your company generates. So when your buyer pays you at 30, 60, or 90 days, you then take that cash and you automatically pay down that line of credit. So the Export Working Capital is a dedicated working capital line for your export sales. You cannot use it to support your domestic sales. And typically a line can revolve. So maybe you've got a relationship with a buyer already and they've been paying you cash in advance. And now you're going to start offering them terms. So you might want to set up, you and your lender might want to set up a really short export working capital transaction, maybe a 90-day EWCP to test the waters with this new payment relationship. And so at the end of 90 days, you might have an option to extend this EWCP for longer. Maybe you set it up as a 12-month EWCP, and at the end of that 12 months, you might revolve it into a second year. So there are lots of options when it comes to how you structure these transactions. The Export Working Capital is a monitored line. It's typically monthly, and you'll provide the lender with your accounts receivable aging, your payables aging, and if you're getting advances on your US-based export-related inventory, you'll provide information on the inventory you have. The advance rates vary and they depend on the asset. So if you've got a purchase order, you might be advanced 80 to 90% of the value of the purchase order. If you've got an account receivable, that uninsured account receivable might get an advance of 80%. Or if it's insured, you'll get an advance of 90%. If you're getting an advance on your US-based export-related inventory, the maximum advance rate is 75%. And the structure is going to vary on your needs. If it's an export-related transaction, you'll get advances against your foreign accounts receivable and the US-based export-related inventory. If it's a transaction-based EWCP, your advances will be against your purchase orders. And then one other way that you can use this export working capital program is to support standby letters of credit. So let's say you have a buyer, he's in Australia and he pays you cash in advance, no worries, that's how you set it up. But in addition to cash in advance, he wants a performance guarantee from you. So he wants you to set up a standby letter of credit for the full amount of that cash in advance that he's paying you. So typically when you go to a lender to set up a standby letter of credit, you need a 100% cash collateral. However, if you use the export working capital program for this, you only need a 25% cash collateral to support the standby letter of credit. Now, collateral for your export working capital transaction is typically limited to the export related working asset. So for example, if you set up an asset-based export working capital transaction with advances against your foreign accounts receivables and your export related inventory, those are the assets that are collateral for the line. So let's take a look at a quick couple of samples. Now, this one is an EWCP. It's a transaction-based, and this is where the advances are made against the purchase orders to allow for pre-shipment working capital. This is an oil and gas company in Houston, and it had average revenues in 2019 of $4 million. They had growing open account sales, so more and more of their customers were purchasing on terms. And this was really stretching their working capital, and they could only take on a limited number of contracts at a single time. Their average purchase order was $1 million, and their vendors wanted upfront payments. So you can see how they were really having a cash crunch between when they had to pay their vendors and when they got paid. So the solution the lender came up with was a $2 million transaction-based export working capital program that was collateralized by foreign accounts receivable and US-based export-related inventory. The borrower received an 80% advance rate on their purchase order. So essentially $800,000 on a $1 million purchase order. And of course, the result was that the company could take on additional contracts and their revenue increased year over year. So the next sample is, it's an asset-based EWCP where the borrower received advances on their foreign accounts receivable. And this is a food wholesaler that had been in operation 20 years, and they had multiple foreign buyers in South America. And they were now starting to offer terms to their buyers if they met certain requirements. So they set up their own internal credit criteria. And part of that was that the buyer had to have a 3-year purchasing history with no late payments. So that's when this buyer would get terms. Once they started offering terms, they had the same challenge as our previous example in that the exporter paid suppliers faster than they got paid from their buyers. So their lender set up a $4.5 million asset-based export working capital program that the borrower used to pay its suppliers. The collateral was the foreign accounts receivable and the US-based export-related inventory. Now, these accounts receivables were insured, so the advance rate was 90%. And the lender also required that monthly monitoring that I mentioned earlier. So I know I've covered a lot of information, and I know you have many, many questions. So one place you can go to for questions on export finance and international trade is the SBA's website, where you will find trade tools for international sales. Or you can go to the YouTube page for the Office of International Trade and view previous webinars, or you can go to our LinkedIn page. Now you're going to get a copy of these slides, and these links are active. So if you just click on it, it'll take you right to the pages I mentioned. So at this point, you want to ask yourself 3 questions. 1, am I a small business? 2, am I selling to the international market? And 3, does the Export Working Capital Program fit my needs? If you answered yes to any of these questions, feel free to give me a call. I'm happy to answer your questions about the SBA or connect you with one of our other resource partners. In the meantime, thank you so much for letting me speak today, and I look forward to hearing your questions.
Great, thank you, Patty. And now I will share my screen and talk a little bit about the STEP grant. Great, so hopefully everybody can see my screen. And so, as I mentioned at the beginning, I'm actually the STEP project director. And here is my email. So if after you want to contact me, feel free to reach out. So many on the call, I looked at the registration list. They know what the STEP grant is. But for those that don't, the STEP grant provides financial assistance for exporting activities to help eligible Utah small businesses. Patty did a great job of defining a small business, and this includes manufacturers, distributors, and service providers. And we work with businesses in all different industries, as well as when I say like manufacturers or service providers, translation companies and whatnot. So it really, the STEP grant helps support entry into foreign markets, as well as expanding into international foreign markets. And a lot of times when you think of the STEP grant in the past, you think of helping provide financial assistance for trade shows, trade missions, e-commerce. But one of our added eligible activities is actually EXIM export credit insurance premiums. So the STEP funds can actually be applied for EXIM export credit insurance premiums. And oftentimes when you qualify for an EXIM policy as a small business, you'll also meet the qualifications for the Utah STEP grant, but you'll also want to check those. The cap on STEP awards for EXIM is actually $15,000 per year, and that's Utah's cap for a STEP grant. And so now you're wondering, okay, great, now where do I go next? Our STEP grant is currently open. And so if you go to our website, this website will provide an overview of the STEP grant. It will define, am I eligible to apply? So one, we're looking for Utah small businesses and really helping them with their exports and expand internationally. I will go through all of the eligible expenses. And then under the Apply Now tab, we'll have a direct link to our application. And I would say it can be completed in less than an hour, so it's not too cumbersome. It also gives you a heads up on our reporting requirements, contact information, and forms that are required by STEP. So you can check out this website to get a little bit more information. And then a lot of times I want to also address the questions that I get a lot when I'm going through the STEP grant. So our applications, like I mentioned, are currently open, and they will remain open on a rolling basis until September 15th, 2022, or when funds run out, whichever occurs earlier. One thing, you want to make sure that you meet the eligibility requirements before you apply. A small business, like I mentioned, can receive up to $15,000 in STEP awards per year. And so that's the cap for the state of Utah. There is a 25% match requirement, but that's 25% of the total award. The STEP grant is a cost reimbursement grant. So how the process works, you apply for the STEP grant, we push it out to our STEP grant committee, and then we'll let you know based on those scores whether you'll receive a STEP grant and for how much, and then you accept the award and go through the process. So it's a cost reimbursement grant, and we'll take you through that process. And a heads up, there are quarterly reporting requirements, at least 2 years following the award, but these are very, I would say, minor, 1 or 2 questions, just to see how everything's going and to get updates on any numbers. So that's actually it from me on regarding the STEP grant. And so now I will open it up to questions and see what's on the chat to see if myself or any of our panelists can answer any of the questions.
I can go ahead and there's a question here that Chris Heslop sent in. How do they handle extended? This was sent in during our presentation. How do they handle extended terms? Example, payments spread over a year. Does this impact or increase the premium? The answer to your question is yes, it can. So if a company is exporting and 60-day terms, they're going to get a price through EXIM Bank. If they're exporting and providing 180-day terms, they're going to get a different price. So the longer the terms are, the more premium that may be due. But we've definitely seen terms throughout the course of a year. So to answer your question, yes, it could impact the premium, how far out the terms are going to be. I hope that answered the question.
Great, and I'm just checking to see if there's any other questions. It looks like they've all been answered. I don't know if there's anybody else who has any questions. I don't know if Brianne's seeing any come up or if they've all been answered, and we did such a good job that we've answered all of your questions, but let's see. One of the questions was, how does the award amount? So if you apply for a STEP grant, you'll apply for how much you're going to need for the activity or EXIM. And so then if it's awarded, there is, Chris is really testing my math here, but there is the 25% match. So for example, if you do receive like the maximum award of, let's say, 15,000, we would have to see 20,000 for the activity, and the company would match 5,000 to make it, easier math right there. But yeah, so the match actually has to go towards the activity. So hopefully I answered that with doing a little different math.
Nicole, there's a question about if the AR and inventory are already collateralized, can you still apply for the SBA revolving line for export? I guess we'd want to understand if the AR and the inventory are already collateral for a loan, do you have the room to apply for another loan? So we'd want to understand, maybe we could do a carve out or maybe there's some other financing structure that might work, maybe other collateral or a different kind of structure.
I'll take the question that Mark posed here. I'm with Cyberjet Aircraft in South Utah. We build a business jet with export capability for sales. Who is the best person with your organizations to call first to discuss EXIM process? So you can talk to EXIM Bank directly. They will provide you, they'll give you an overview of their products. Their three main products that EXIM has are EXIM Working Capital, EXIM Credit Insurance, and EXIM Working Capital, Credit Insurance, and the medium term. If you're building a jet, and that is something that is a very large piece of capital equipment, you probably don't want to sell it on 30-day terms, right? You probably want to sell it and provide a buyer 5-year terms. So there's different programs. With capital equipment like that, the EXIM medium term may make more sense. And that is where a company, let's say in Brazil, that's purchasing a jet, would be able to obtain 5-year financing. You as the exporter, the manufacturer, would get paid upon site, and the buyer would have 5 years to pay. So whenever I'm talking to an exporter, I always ask, what are you selling? Is it a capital piece of equipment? Does your buyer need 30 days or 5 years? Or are you selling an inventory type of product, like masks, or you can't export masks right now, but pencils or some sort of an inventory product that can get 30 or 60 days. So you can always go and call EXIM Bank. They will explain the programs, but they can also put you in touch with somebody local to you that can explain the programs. And then as it gets a little bit deeper, they can get you out to providers that can help you depending on what program that you're looking at.
There's another question asked, should companies interested in Export Express or the EWCP go to the SBA or to the participating lender? And really it's up to you who you're more comfortable going to first, because if you call the lender, he may refer you to me, or I may set up a joint call between you and the lender, and the three of us can talk about what the programs are and what the lender, and you decide to, which program is a better fit for you. So whichever way you're comfortable going with this, either starting with your lender or starting with me, there's the proverb that says the journey of 1,000 miles starts with a single step. And so really all you need to do is start the phone calls.
This question here, what if a group wants to partner with a company or companies that are also outside of Utah for a joint exporting launch? I would say get together with them and talk to one of the local providers, but these programs do not have state borders. So it really will come down to, I think, where the main exporter is, but these programs are all across the United States. I hope that answered the question, or if anyone else has any. Is it true that Boeing is a large user of EXIM for long-term funding? Yes, it is true that Boeing has in the past used EXIM Bank for funding. We need Boeing planes to use the EXIM programs so that we can then support all of these small exporters. But if you also think about it, it's not just Boeing that's building the plane. There are so many other indirect exporters. So EXIM really supports, their mandate is to actually support small businesses. But there are certain circumstances where even large banks may not be the best positioned to structure a transaction. EXIM is not supposed to compete with the private sector. So if the private sector can do the deal, they will. If EXIM needs to get involved, they will as well.
And it looks like we have one in the Q&A. They asked if our accounts receivable and inventory are already collateralized, can we still apply for the SBA revolving line for export?
So we'd have to take a look. It's possible we might be able to do a carve out on the export related accounts receivable and inventory. We'd need to know the details of what that borrowing is. But certainly it's worth a conversation to understand what the specifics of the borrowing are, so we can see if you do have the ability to take on additional debt.
Great. Well, it looks like all of the questions have been answered by our panelists. Oh, yeah, it looks like everything has been covered. However, you have our team at World Trade Center Utah will be sending out the slides, and it includes our contact information for everybody who spoke today. So if there aren't any additional questions, we want to thank you again for spending your afternoon with us. And we hope that you join us for other future webinars and events, and be sure to contact us with any questions. So everybody have a wonderful afternoon. Thanks, everyone.